Welcome, future-focused individuals. Today, we're diving into the essential steps of financial planning to secure your future. From setting clear goals to building an emergency fund, we'll explore 10 crucial strategies to help you achieve long-term financial stability. Whether you're just starting out or preparing for retirement, join me as we map out a path toward financial security and peace of mind. Let's empower ourselves with the knowledge and tools needed to build a brighter tomorrow. Get ready to take control of your financial future. Let's begin. Today, we will talk about 10 essential financial planning steps for a secure future. So before we get started, make sure to hit that like button. Also, subscribe to my channel. 1. Manage your money. Managing one's money need not be boring. It's not rocket science, and you need not be from a financial background. You only need to show a bit of commitment. Deciding to save is the first step towards money management. Saving money can be a powerful step towards greater financial independence. Imagine borrowing from a friend for that urgent visit to the doctor. In case you don't have any friends, you might have to swipe your credit card. And you know credit card is the most expensive form of debt. Repeat this a few more times, and you end up in a debt trap even before you realize that. You may have many financial goals in your mind, like buying the vehicle or the latest smartphone or wealth accumulation. In all these situations, you need money, but where will it come from? You got to have savings. 2. Regulate your expenses wisely. If you are living paycheck to paycheck and finding yourself struggling for money even before the month ends, then chances are you are living way beyond your means. Maybe there are a lot of unplanned expenses. These might be leaving you with no money for the necessities. But there's a way out of this. Try preparing a budget. Unless you have a budget, you won't be able to control your cash flows. A budget simply shows how much money you have coming in and how those funds are spent. 3. Maintain a personal balance sheet. Having a personal balance sheet helps to know what you own and what you owe. It's a pretty powerful tool to take your finances to the next level. It's a statement wherein you can jot down your assets and liabilities. The difference between your assets and liabilities shows your personal net worth. Before getting started, pull together your bank statements and other proofs of the liabilities. Then, list down your assets like the bank balance, investments, home value, and value of other assets. Take a sum of all the assets to arrive at the total value of your assets. 4. Dealing with surplus cash judiciously. How you deal with surplus cash determines your future. When you don't have a plan, you are likely to overspend. This money could have been used to make you financially self-sufficient. In the backdrop of inflation, everything is going to be costlier with each passing year. If you don't invest, your money won't grow to bridge the inflation gap. Otherwise, you might not be able to retire as you'd want to. 5. Create your personal investment portfolio. Constructing your first investment portfolio is an achievement in itself. After all, it is your first step towards wealth accumulation. Building a portfolio involves distributing your investment amongst asset classes like equity, debt, and cash. It is known as asset allocation. Although equity is the best tax-efficient and inflation-countering vehicle, putting all your money in equity isn't a prudent move. You need to diversify the sums that are to be allocated in each asset class as per your investment goals. It is always wiser to be a long-term investor in order to accumulate greater corpus. 6. Planning for retirement. Planning for retirement is important for everybody. Owing to a sedentary lifestyle, you are more vulnerable to ailments such as diabetes, hypertension, and heart attacks. Healthcare costs are increasing with each passing year. In the absence of a social security net, you need to have your own funds to fund for all these expenses. Like many others, you might be thinking that it's too early to start planning now. At this rate, you begin retirement planning late and accumulate a smaller amount, as compared to what you could accumulate given that you started early. This is due to the magic of compounding. It enables you to even retire early and lead a hassle-free life. 7. Manage your debt wisely. Lack of debt management may eat up a major part of your paycheck. You may end up borrowing fresh loans to pay off older loans. If it gets out of control, then you may fall in a vicious debt trap. Your critical life goals may get sidelined, and even your retirement may get delayed. Strategizing your debt payment may keep you away from such troubles. All you need is being informed about how much you owe to whom. Chalk out a schedule to pay them off. In case you have a lot of debt to shoulder, start paying off the most expensive one first. 8. Get your risks covered. Human life and property are vulnerable to risks. These risks can lead to loss of income and put you and your dependents in a financial jeopardy. Similar to investing for wealth accumulation, ensure wealth preservation through insurance. You end up paying more and remain inadequately insured. Instead of this, a term insurance plan will be a wiser proposition to buy. Term insurance plan provides you higher risk coverage at a reasonable price. Don't expect returns from your life insurance policy. Ideally, the sum assured needs to be at least 10 times your annual income. Before buying life insurance, you can compare policies online to select the one which satisfies your requirement at affordable prices. 9. Planning your estate. Believe it or not, each one of us has an estate, whether it's your vehicle or your home. The cash lying in your saving and current account, every asset constitutes an estate. It's your responsibility to decide what happens to these when the time comes. You need to ensure that the right asset is assigned to the appropriate individual in the right manner. Ultimately, you need to think about estate planning. Often, individuals misconstrue that estate planning is meant only for the wealthy. However, the reality is totally opposite. It is relevant for every person who can't afford to leave his assets in the hands of the unwanted after he is not around. 10. Planning your taxes. It is necessary for you to analyze your finances from a tax efficiency point of view. You are free to claim various tax exemptions, deductions, and benefits so as to reduce your tax liability at the end of the financial year. Even though tax planning is very much legitimate in nature, you need to ensure that you don't indulge in tax evasion or tax avoidance. There are a number of deductions available under Sections 80C through to 80U that are given in the Income Tax Act. If you like this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the subscribe button.